Good afternoon. Welcome to Midcap Radar. I'm Sonal Bhutra. With me is Hormaz Fatakia. Well, a day of fall, but the midcaps have recovered, at least staying flat in a weak market like this. So interesting times ahead. We'll discuss all that and a lot more on the show today.
The bulls fighting tooth and nail, right, to defend lower levels on the Nifty. We'll talk about all of that on the show, but here are the top headlines at 1:30 this afternoon. The markets are off the lows of the day, but declines exceed advances. PSU banks and metals are the big drags, while IT and pharma remain resilient. Midcaps are the better performers.
Adani Group managers and associates, including Gautam Adani, have been charged by a New York District Court and the Securities and Exchange Commission for bribery. The new spooks Adani Group stocks and leads Adani Green to scrap its bond offering.
UPL strikes a deal with global investor AlphaWave Global to invest $350 million in its seeds platform Advanta at a post-money valuation of $2.85 billion. The move, along with funds from a rights issue, will help pare the agrochemical major's debt.
The Indian rupee has fallen to yet another low of 84.45 per dollar and sustained selling by foreign funds. Dealers say RBI continues to supply dollars but is selling less as intensity of dollar demand has lessened. Okay, all right. Those are the top headlines for the markets. As Hormaz pointed out, fighting it for the bulls. But for now, the Nifty is down around 167 points. The mid-caps, they have been hovering in between that green and red mark for now, absolutely flat. But it is an outperformer in a market like today. The advance decline ratio in favor of the declines again. And very few and far sectors which are doing well in trade today. IT, for instance, we've been talking about it since morning. That has slipped into the red. Nifty Realty has made a comeback, and so has the private banking index. But, this was something which was expected, the fall, because of what global markets did. But a lot otherwise also happened, and that's something we've been tracking.
Subdued sentiments because of the turn of events, and global cues also not supportive. And that is showing up on the markets. Today being the weekly expiry for the Nifty as well, that has been completely relegated to the background with all the turn of events that have been happening since the morning. But the broader markets are doing fairly well for themselves. So what are some of the top movers then within the broader markets? Vamakshi is here to take us through that. Vamakshi, good afternoon.
Well, good afternoon, Hormaz. Let me first start off with the list of the stocks that are declining in the trading session today. Honasa Consumer has managed to make it to the list on every trading session of this week. The stock again today is down nearly 10%, and with that the stock has fallen somewhere over 35% in the last few trading sessions. Thermax is another counter that is seeing a fair bit of pressure. In fact, it has corrected 23% from its recent high. Century Plyboard as well touched a 5-month low intraday. Some other stocks that are down and out in trade today includes Kirloskar Oil. That stock is down nearly 5%. Cochin Shipyard again down in trade for 4.6%, and in fact it is down nearly 56% from its 52-week high. Aegis Logistics is another counter that is down and out in trade today. But apart from that, there are lots of stocks that are gaining momentum in the trading session today. That includes VIP Industries. Amber Enterprises is another counter that is surging by almost 6%. CRISIL, Suzlon Energy as well as Acom Drugs are some other counters that are robust. Suzlon, keep in mind, is locked in the upper circuit after the management joined us with some positive commentary. But apart from that, there are realty stocks. The whole pack is buzzing in trade today. We have Prestige Estates, which is up nearly 4.5%. Brigade Enterprises, Phoenix Mills and DLF are just some other counters that are surging somewhere between 2 to 3%. And lastly, let's also look at some of the stocks that are being, moving in trade on the back of strong volumes as well. Fortis Healthcare is up nearly 3.25%. Nalco is another counter that is continuing to gain momentum. NLC as well as GMR Airports are some other counters that are above, gaining 3% and down nearly 4% respectively.
Okay, all right. So those are some stocks on our radar. Thank you so much, Vamakshi, for joining us. We'll slip into a short break now. When we come back, we'll be speaking to the manager of Epigral. They'll discuss the Q2 numbers and the outlook going forward. Stay tuned. Welcome back. You're still tuned into Midcap Radar on CNBC-TV18. Let's talk about Epigral now. For Q2, company reported a strong set of numbers with revenue surging 32%, profits saw a 111% jump. To discuss the company's Q2 performance and the outlook going forward, we are joined by Maulik Patel, the chairman and MD at Epigral. Maulik, good afternoon. Thank you so much for joining in today. But it's been a good set, but you did indicate that it was largely driven by volume growth. Realizations have been lower. One, how much lower have the realizations been? Has this trend continued in Q3 as well? And what is leading to the pricing pressure in domestic market for caustic versus the global markets? That's where prices are steady, right?
No, it is changing from last month. Caustic prices are going up, and I think in the last quarter, I think this existing quarter, I think the prices are moving on the upper side because of the global demand. So caustic price is mainly driven by the metal demand globally, and I think it is going high. And the same time, the chlorine, which is a co-product along with the caustic soda, that demand is downward. So because of the co-product demand is downward, the caustic price is going up globally.
Okay, so realizations are improving across the value chain for your products. What's about volumes as well? Will it be, are they as good as what you saw in Q2?
So yes, volumes are increasing in Q2. Volumes are not increasing Q2 compared to Q1, but year on year we are 17% up in H1 compared to last in FY24. And in overall in H1, I think this year we are quarter on quarter. I think volume is not moving up because of the couple of products, which is CPVC and epichlorohydrin, which is mainly it is not picking up in terms of the in the monsoon season because there is a demand always lower side. And we are expecting, I think, Q3 and Q4, the demand of the ECH and the CPVC will pick up.
Maulik, good afternoon. Thank you for joining in. What's driving this bullishness of yours on the CPVC and the ECH segments? Are you able to currently sell at full capacity? And what's the outlook looking like for the second half?
So ECH, we have almost reached to 80% capacity and we are operating at 80 to 85% operating capacity right now. And CPVC, we just expand our project in March, commission our project expansion in 45,000 tons, which is close to capacities become 75,000 tons per annum. And we are operating at 60% capacity right now. So we are expecting in Q3 and Q4, probably in end of Q3 and Q4, probably we'll reach to almost 70-75% capacity of the CPVC as well.
So, as Hormaz asked, Maulik, what is driving this bullishness that you have? Because you're going to be doubling your capacity, right, in both these products. Are you already in touch with your current clients? As they asking for more volumes coming in from here, or are you getting newer clients? Give us the rationale.
Yeah, so both the project which is mainly going in the infrastructure project, and the epoxy resin, which is a major application for the ECH also. And that is also going in the infrastructure, automotive, and the renewable energy, which is windmill majorly. So all these sectors are booming in India, and we are expecting the growth in both the sectors for both the products in double-digit growth in next 5 years. And that's why we are wanted to be ready because we have a first mover advantage in India. We are the first one to manufacture as an import substitute in epichlorohydrin as well as in CPVC. So we wanted to take this advantage and we wanted to be ready before the demand picks up in India.
So apart from these segments, then Maulik, is there any other opportunity that you are looking at, both organic and inorganic? If you could share that with us.
Yes, we are looking for. I think import substitute is a focus, and our 90% sales in the domestic in India. So we are looking for a more value chain, which is the import substitute, and the demand is picking up in next 10 years based on the infrastructure and the chemicals demand. So we are looking for a new value chain in the newer location, in existing which is not in existing location, and probably we are looking that particular growth in the newer location, new value chain probably after FY28.
Okay, after FY28. Till FY28, will you largely be done with the capex that you had announced earlier, be it the chlorotoluene chain, you have ECH and CPVC as well. What's the outlook on capex for, say, next 2 to 3 years, and how will you be funding it?
Yes, we have recently done the QIP, which will going to help for the growth of the capex, which we have announced, ECH doubling the capacity and the CPVC capacity, which we are going to do almost 780 crore capex in next 1.5 year, which we are planning to commission in Q1 FY27. So till FY27 and FY28, our growth is coming from the expansion of the CPVC and epichlorohydrin and the existing capacity, which we have not reached on the optimization level yet. And the chlorotoluene, which is another value chain, we are also working on the import substitute, which is majorly used for the agrochemical and the pharmaceutical intermediate, which we are planning to commission by end of this quarter and almost by Q4. So this will drive the growth till FY28, and after FY28, we are planning for we are working in a new value chain, which will give us a growth for the after FY29 and FY29 and 30.
What about the chlorotoluene capacity, Maulik? Is this for the export markets or is it India specific? And part two of my question is if you could also share the domestic export mix currently that you have.
So currently, as a company overall, we are having a 90% domestic market and 10% export market. To answer your question about the specific on the chlorotoluene side, definitely it is going to be 50% on the domestic and the 50% export. But eventually, the specialty chemical companies are growing the volume, and then the more and more opportunity will increase in India. Eventually, this ratio will increase towards India more and less on the export.
So you will also keep overall, split between 90-10 for your overall portfolio. Is that the trajectory that we can look at, or will it change and maybe tilt more towards exports in some case?
See, product on product, there may be difference, but as a company level, definitely our focus is on the import substitute and on the domestic market more. But as we are expanding, so we are just keeping as a backup as an export, because when you are expanding too aggressively, sometimes Indian market is not ready that point of time when we commission the plant. So we wanted to de-risk ourselves a little bit. That's why we are keeping a 10 to 15% export continuously.
Okay, all right. Is there good demand in the export markets right now, Maulik? Which are the countries that you are catering to? Because Europe has been talking about lower demand. Is this something which is hurting exports in any way?
So in terms of demand, definitely there is no growth other than India globally. But looking at the problems in Europe, many chemical plants are shutting off. So there is a demand in the short term right now in export opportunity in European side, and probably we are expecting in the future probably the duty comes on the other countries, which will also pick up the demand in the American region also, if the duty will come on Chinese region. So that is possibility in the future, but right now the major demand is coming from the European side for epigraph.
All right, Maulik, we leave it at that. Thank you so much for joining in, sharing with us your views on the quarter gone by. Wish you good luck for the second half as well. That was the management of Epigrill, the stock currently trading at the flat line. But time for a short break here on Midcap Radar. More on the markets and specific stocks on the other side. Stay tuned. We'll be right back.
Welcome back. You're still tuned into Midcap Radar. Well, there is some pressure that we're seeing on the midcap side. So the index is down 50 points. When we started the show, it was at least at the flat line with some green that we're seeing as well. So mild fall that we are seeing from there. And we keep getting a lot of updates coming in on Adani Group as well. We'll cover it in greater detail in just a bit. But for now, let's also look at UPL. That stock is in focus and it is surging in trade in an otherwise weak market. This is because there has been a stake sale in the Advanta Seeds business, 12.5%, which is valued at around $350 million, which will be sold to Alpha Wave Global. Now, remember, this is the second such investment that we've been seeing in Advanta, which is a subsidiary of the company. It will be done in two tranches. The first primary tranche is where $100 million of investment will be made by Alpha Wave Global, and the $250 million will be a stake sale by UPL in the Advanta business. The primary proceeds will be used for organic or inorganic growth in the Advanta Seeds business, and the secondary one will be used to deleverage UPL's balance sheet, which has been ballooning. Debt has been a problem for UPL as well. Now, this particular transaction, it values Advanta at $2.8 billion, which when KKR invested in was valued at $2.25 billion, where they had invested around $300 million in the company. So the valuation uptick is what the street seems to like. Additionally, the company has also decided to raise funds via rights issue, 3377 crore rupees at 360 rupees a share. So these are some of the positives why stock is doing well in trade. HSBC is a buy with a target price of 680 rupees a share. They say that the rights issue, which now has to be approved by the shareholders but approved by the board, is a positive. They also say that the private equity player coming in is giving a valuation fillip to the stock and to the company as well. And generally, they are bullish on what they will be able to use these rights issue proceeds for. It'll help in deleveraging and debt reduction. So overall, positive commentary coming in from HSBC as well.
The much-awaited rights issue. Finally, the details are out for UPL. The stock at the highest point of the day, now 3% higher at 562. Meanwhile, AU Small Finance Bank's MD and CEO Sanjay Agrawal told CNBC-TV18 that this is the toughest time in terms of deposit growth. Now, my colleague Yash Jain spoke to him on the sidelines of the recently concluded Global Leadership Summit and spoke to him on the business momentum and the outlook going forward. Listen into excerpts from that conversation.
In our journey of last 7.5 years as a banker, this was the most toughest time in terms of deposit build-up. But I think last 2-3 months remain still better than what we witnessed for last 1 year. And I hope that, by getting to next level in terms of, the first, I think the most important thing is that, capital markets are not at that level. People might want to save more money in the bank account now. There would be much capital coming in the next 2 years. So I think at our level, we are still managing the growth, but still the cost of money is high. So we need to manage it in a way that, doesn't eat up our margins. But we had handled very well till now. We have just applied, and we are running our bank as SFB as of now. I'm very happy with this platform, and when regulator RBI will allow us to be there, we'll think more about that at that time only.
Okay, all right, that's the word coming in from AU Small Finance Bank. But with that, we've completely run out of time on this edition of Mid-Cap Radar. But when we return, we'll bring you a special coverage on the Adani Group stocks, which are trading in deep red today, as Gautam Adani is charged with bribery in the US. Stay tuned for that conversation.